Hey, we're going to be looking at Nvidia. So that's ticker symbol NVDA. Last time we looked at this was on March 17th, so a little over a month ago. At that time, it was trading at 257, so it's at 262 right now. So relatively flat. Right here in the middle, we do have the 1 month chart in front of us, and you can see it's had more ups than downs, but ultimately it's relatively flat in that time. I had a buy point marked at 237, so it's still way over that. No resistance point for this one as of now, mainly because of the large uptrend that it's been on recently. Outside of that, the plan is we're going to just go over some of the news that kind of caught our attention over this past little over a month. I'm going to look a little bit deeper into the PE ratio, which is right here. Currently, we'll just round that to 151. We're going to dissect that just a little bit to see how that's going to impact us going forward. And then, of course, we'll wrap up with the technical analysis. So before I get started, I just want to say if you have any questions or if you want to add something that you think I might have missed in the recent news, by all means, let me know in the comments. I'd be happy to answer the questions or see these comments because I want to know as much as I can about this. So with that said, let's look into some of the news. So to start off, it looks like they've made a deal with Shutterstock. So at NVIDIA's March 2023 technology conference, Shutterstock said it's using NVIDIA's cloud software powered by their leading semiconductor systems to create a new 3D rendering tool for creators. So once again, I don't think this is going to be a make or break type move for them by any means, but it's another company that's getting behind NVIDIA, wants to use their products. More on Shutterstock is launching a new text to 3D AI feature on its editing software called Creative Flow. The service will allow creators to describe an object in simple text, and Creative Flow, powered by NVIDIA's Picasso generative AI service, will convert the description into a digital 3D model. So, I mean, this shows what NVIDIA is offering, this AI service, able to convert words into a picture, and Shutterstock is going to use that platform. So it's very interesting to see. Shutterstock will also make the service available on its 3D objects marketplace, turbosquid.com, if you're familiar with that, and will also be integrated into NVIDIA's Omniverse platform. So it looks like there's a little bit of a trade there. Things that are created on Shutterstock looks like that'll be on NVIDIA's Omniverse platform. So I guess there's somewhat of a trade there. Moving on, we have a little bit from Google. Apparently, Google had their own AI supercomputer, and they're saying it's faster than NVIDIA's. So I guess two initial thoughts from that. The one is NVIDIA can be beat. So Google's kind of made an attempt here, and they've said they've been able to beat NVIDIA at least for the moment. And then the other side is, I mean, this just shows how far NVIDIA has come, is that the Googles of the world, one of the biggest companies, is competing with them and openly more or less bragging that they beat them at something for the moment. And I keep saying for the moment because you'll see why in a second here. But so just to kind of summarize it, Alphabet's Google on Tuesday released new details about the supercomputer it uses to train its artificial intelligence models, saying the systems are both faster and more power efficient than comparable systems from NVIDIA. So very interesting. So let's look a little bit further. Google TPU is now its fourth generation. Google on Tuesday published this scientific paper detailing how it has strung more than 4,000 chips together into a supercomputer using its own custom developed optical switches to help connect individual machines. And then basically what it all comes down to is Google saying that for a comparability size system, its supercomputer is up to 1.7 times faster and 1.9 times more power efficient than a system based on NVIDIA's A100 chip. This was the latest and greatest from NVIDIA at the time. So, I mean, number one, I gotta say, I realize. I mean, I guess that is a lot faster. I mean, they're saying it's almost twice as fast in these certain fields, fast and efficient. So that is pretty uh, impressive. I will say that. But the caveat for the at the moment piece that I kept saying is because they were comparing it to NVIDIA's A100 chip. I'd be curious to see how it would compete against the H100, which is the newest chip. Uh, I'm sure it might be still faster, but not by as much. Be curious to see how those two would uh, perform next to each other. But moving on to the next one. So AI, of course, this has been one of my buzzwords for a while, especially for semiconductors. And this is just kind of confirming it. Goldman Sachs comes out with this article saying they see AI as a significant disruption. Uh, Goldman Sachs thinks artificial intelligence will have on the labor market over the next few years. Wall Street firms project that generative AI could enable 300 million jobs globally to be fully automated, with as many as two-thirds of U.S. jobs partially automated by AI. To further to add to that, estimates that AI could drive a 7% increase in annual global GDP over the next 10 years. This translates to an economic impact of close to $7 trillion. So, I mean, that's why it's a buzzword. I think there's a lot to it. I mean, clearly they're talking about um, its impact on the workforce, and I'm sure there's other like avenues that than just artificial intelligence itself, such as like the chips that NVIDIA is going to provide to help enable AI to actually occur. I think they're just extrapolating that to, okay, they made the chip for this machine. The machine does this job. The job then transports the product. So it's tacking on all these elements where AI itself, the chip that NVIDIA would sell, I don't really think that's it probably is $1 trillion business, but to this extent, I think that's where they're getting this number. They're extrapolating it out so far. Uh, but as we scroll down, they're going to touch on NVIDIA specifically. And so we have Google here, we have Amazon, and we have Microsoft. And then we have NVIDIA. NVIDIA works with all of them. So that is very good. And that's pretty much what this piece wants to touch on, is NVIDIA stands to win regardless of which tech giant comes out on top. The chip maker has announced a string of deals with all three AI leaders, which we just went through, in addition to a couple other AI collaborations. So just to kind of give a little more detail there, they say NVIDIA and Amazon are working together to build a large-scale infrastructure on AWS for building AI apps. Google Cloud is using NVIDIA's L4 Tensor Core graphics GPU, which is ideal for building big generative AI models. And then Microsoft and NVIDIA are teaming up to make NVIDIA's supercomputer service, this DGX Cloud, available on Azure. Hopefully I'm saying that right. And then as far as like the other category, NVIDIA also has developed AI platforms for self-driving cars and other intelligence devices, including drones and robots. So they're very diversified, and you can see that it's not that they're just relying on these big deals. These big deals are, to put it simply, a big deal to them, but that's not where all the money's going. They have other projects, other customers, so it's not a big deal that if, say, down the road Amazon were to drop off, they would still have other customers, not just these huge ones, but also other big ones that are not the Google, not the Amazon. They're working with many other clients. So moving on, we have another competitor here, Qualcomm. This is another stock that we will be following up with very soon, and will continue to follow. But artificial intelligence chips from Qualcomm beat Nvidia in 2 out of 3 measures for power efficiency in a new set of test data published on Wednesday. So again, I think this just speaks to how highly people think of Nvidia, that when they can beat them, they're going to brag about it. So this one is actually like legitimate. It's way more recent. Qualcomm's AI 100 beat Nvidia's flagship, the H100. And then it goes on to say exactly what it was beating it in. So let's see. Qualcomm's chip hit 227.4 server queries per watt versus Nvidia's 108. Qualcomm also beat Nvidia at object detection of a score of 3.8 versus Nvidia of 2.4 per watt. And object detection can be used in applications like analyzing footage from retail stores to see where shoppers go most. Just insightful there. However, Nvidia does beat them in probably the most important category, but of course Qualcomm's gonna toot their own horn about what they did win, but Nvidia won. They took the top spot in both absolute performance terms and power efficiency terms in a test of natural language processing, which is the AI technology most widely used in systems like chatbots. Nvidia hit 10.8, while Qualcomm was at 8.9. So, whoops. Okay. So, I guess I would break this. I would say this was even. Moving on. So we have this next guy. So they're talking about a refresh here, mainly for the PCs. We have this Ray Wang. He's saying, so the next refresh cycle is going to be in 18 months. And I think we're going to have to wait that out, not just with Apple, but with other PC manufacturers as well, as you're seeing for Lenovo, HP, and Dell. So he's just saying that we've seen the slowdown in PCs, and that's probably going to run its cycle in about another 18 months. But again, Nvidia has other segments, so that's not like a crazy thing at this point. He even kind of goes on to say, if I can find it, it's somewhere at the bottom. Let's see. But where is it? Not here. Basically, he says there's a lot more out there than just the PCs, specifically for Nvidia. I just saw it, I swear. Oh, here it is. But there's a lot of automation ahead and a lot of AI that can be applied. And I think every organization is right now trying to figure out what the level of operational efficiency they can deliver. So we're going to see how automation and AI continues to change how we work. And so that's basically his trade-off. He's saying, yes, the PC market's slowing down, and we'll probably see a pickup in 18 months, which will help a company like Nvidia. But also, there's a lot of automation and AI type of activity going on, which also feeds into Nvidia. So I wouldn't even say it balances out. I would say the PC market, sure, that brings it down a little bit, but the AI and automation is like way up here. So clearly Nvidia's ahead on this one. Next we have Nvidia released a new product, this GeForce RTX 4070. I'm not too big on this type of technicals, but this sounds very intriguing. So just some of the details. Nvidia today announced their GeForce RTX 4070 GPU delivering all the advancements of NVIDIA Ada Lovelace architecture, including this DLSS3, real-time ray tracing technologies, and the ability to run most modern games at over 100 frames per second at 1440p or 1440 pixel resolution, starting at $599. This is going to allow the games such as A Plague Tale, Requiem, Dying Light 2, Microsoft Flight Simulator, Warhammer, all these games to run at over 100 frames per second. So that's one of the pluses here. With the DLSS3, AI-powered frame generation creates a new high-quality frames for smoother gameplay, rendering 7 out of every 8 pixels in a scene. Another big piece to this is for broadcasters deploying the 8th generational NVIDIA video encoder with support of AV1 will enjoy 40% better efficiency. Live streams will appear as if bitrate was increased by 40%, which is a big boost to image quality for popular broadcast apps like OBS Studio. That's actually what I use. So pretty good. Something else is video editors will see 20% faster video export speeds thanks to the 8th generation NVIDIA encoder on GeForce. There might be a couple other pros to having this latest device, but those were some of the big ones. The last news article before we branch over into dissecting the PE ratio is one of the brokerage firms, HSBC. They are upgrading NVIDIA. Before it was a reduce, now they're saying it's a buy, noting NVIDIA's incredible AI pricing power is not fully priced in. So that just makes you wonder. But that wraps up the news. So going back to the PE ratio. So currently it's at 151, we're going to say. If we look at this chart, this was on macro trends, we can see the trailing earnings per share is at 1.74, and the PE ratio at that point was 112. And since we're at today's price, it's gone up. The PE ratio was about 112. Now it's at 150. The last they updated it was 155. I gotta say, I looked into it, and you can do this yourself too. Whenever they give guidance, they're giving you all the tools that you need in terms of the revenue, gross margin, operating expenses, and this other income/expense. They're giving you all the tools here that if you want to, you can just basically plug in the numbers that they're giving you into these categories listed out here, and you can figure out the diluted earnings per share for the next quarter. So we did that, and the result was they're going to make about 64 cents. That, based on what their outlook is, they're going to make 64 cents per diluted share. And if that's the case, if we go back to our macro trends chart, it doesn't show up by quarter. I saw it earlier, but there is, I closed it. I'm not sure where I pulled it, but this 174, actually it might be, let me see here. No, that's not it. Maybe it's in the financials. Where I'm going with this is that 174, how it's broken out is there's 2 quarters with 50 cents per diluted share. Can I do quarterly here? Let's see, diluted share. Yeah, so here we go. So that 174, that's these 4 numbers right here. That's 64, 26, 27, 57. And right now they're projecting another 64. So what's going to happen next quarter, assuming that the numbers that they're projecting actually hit or come within a very small difference, what's going to happen is that 64 is going to go away. We're going to add these 3 numbers and then tack on another 64. So that PE ratio is basically going to be the same. Once again, barring any minor differences in terms of revenue and gross margin. Or alternatively, we might see a difference in shares outstanding, which right now, as far as we know, it's going to be the same. Of course, that'll update probably once earnings come out sometime in May. Uh, so, barring any crazy changes in the shares outstanding or some disaster in terms of expenses or revenues, I'm expecting it to stay the same. And the reason why I want to point that out is right now it seems really high. The PE ratio seems really high, but the way to bring it down is there's only two ways to bring it down. Is either the earnings per share needs to start going up, and that way when we're at the price that we're at, the earnings per share goes up. That means the PE ratio gets pulled down because we're dividing the earnings per share by price, or the price by the earnings per share. So the opposite. So we're taking the price, dividing it by the earnings per share. So if the earnings per share goes up, then the PE ratio is going to come down. Well, I'm saying the earnings per share is going to stay the same, at least for another quarter. Alternatively, if the earnings per share continues to fall or starts to go flat, and we want the PE ratio to come down, then shares need to start being traded for less. People need to start selling it, bringing the price down. And so the question I have at this point is, what is more likely to happen? Is Nvidia going to start having lower earnings per share? Not likely, based on what we're seeing, based on everything, all the good news, all the good deals that Nvidia has. It's rare that we're seeing bad news from them. So the other question would be, are people going to start selling this and bring it down? Again, a lot of people are saying to continue buying this one. I mean, we even just saw HSBC, this brokerage firm, saying they are recommending to buy this. So they're going with the assumption that if the P ratio is going to come down, it's going to be because the earnings per share is going to start going up. And so if we just take as an example, back here, this was like a previous peak. This was like peak chip selling mania in like early 2022 apparently. Earnings per share was about 385. If we take today's price divided by 385, that brings the PE ratio down to a more familiar, maybe like 80. 80 was very common. If we look at like right around when things were going crazy, we see it was around 80, 70, dipped down to about still around 70, pop back up close to 80, and then we started seeing it drop, and now we're seeing it pick back up again. So it's almost like it knew the earnings per share was going to start dipping, and so the PE ratio dipped along with it because of the price, and now we're seeing it pick back up because earnings per share is going down and the price is going up. So it's like it's pulling both ways. And so what I believe is going to happen, the way the PE ratio is going to pull back is the earnings per share is going to have to go up because people clearly do not want to sell. What we're hoping for, we're hoping that people do not look into it this deep. We're hoping that people will see, oh, the earnings per share stayed flat for a whole nother quarter, and they're going to start selling the stock. If they do that, hopefully we can capture it. And again, we know that this stock can trade for probably $3 to $4 earnings per share pretty easily, especially with the growth that everyone's projecting in front of this. It's very easy that this one could pop right back up in probably the next year to an earnings per share of $4 trailing 12 months. And so if we put in just a quick calculation here of, so currently it's trading at, do I have it up? 262. 262 divided by $4 earnings per share, That brings this down to about a P ratio of 65, which is below the average. And again, I realize that's high for any company, but it pulls it back into a realm of reasonableness. And so even though that PE ratio is very high today, I think it's only because the earnings per share is so low. That's the issue. Their earnings are going to pick back up, their revenues are going to pick back up. So what we're hoping for, and we can now start to look at the technical analysis. Again, what we're hoping is that right now, maybe what's happening here, we'll zoom in. We're on this uptrend. So far this week, it's pulling back. If we look at the after hours, it looks like it's whatever happened today. There was a big swing. Not sure what happened today specifically. I didn't look into it. So if you know, by all means, share it down below. But right now, it's basically at 270. So whatever loss was happening right now, it looks like it made it right back up, because 270, that's more or less right back up here. What I'm hoping happens with this one, because again, earnings don't come out until May. If we go here, what's the summary? When do they think it's... So earnings is coming out late May. What I'm hoping is people start to think and see, oh, earnings aren't going to be all that great this quarter. So what I'm hoping happens with this one is maybe something like this till about May. I don't know if that's too... I don't know if that's believable at this point. I'm going to make this one yellow. But what I'm hoping happens is maybe something like this. Maybe until earnings come out, we see something like this. Then what I'm hoping happen... Let's actually make this a poly. What would be optimal for us is if we see something like this till about second quarter comes out. You know, it might have fell a little bit. And then all of a sudden, earnings come out. They see the earnings per share doesn't meet expectations, or... that's the problem. I feel like they're going to meet expectations. Will it continue to trade higher? Man, I guess in a dream world, what I'm hoping is it goes relatively flat right now. Next earnings come out, and it takes kind of a dive. So from 5 to 8. I guess it's really going to depend. It's going to depend on what they actually say the third quarter is going to look like, which everyone's thinking it's going to be high. So if it's not as high, man, this one's... I think for now, my opinion is we want to buy the dips whenever they are. Yeah, let me know what you think about this one. I don't know if I'm getting too caught up in the PE ratio, but what I would like to see happen is we would catch some people off. The problem is a lot of people look way further ahead than just this quarter and next quarter. I don't know if people would fall for this. If they do, I mean, this would be kind of like the trajectory. We would see like a slight decrease. Results would come out. We would see a flat earnings per share ratio, or PE ratio would stay flat depending on wherever the stock price is for the day. If anything, it would probably go up higher, you would think, because we could see something like this where it just starts trading at a little bit slower but still upwards. And then once the results come out, if it's flat, possibly we'll see a pullback. Yeah, I guess for now, I'm going to update my buy point to 228. I'm just going to be hopeful. I'm going to say expecting a flat quarter in terms of EPS. Buy dips, I guess. Okay, I feel like I kind of went on for a little bit there, but let me know what your thoughts on this one. What's your strategy going into this? As far as the uptrend, it looks like it wants to break it, but like we saw, it bounced right back in after hours. So again, I'm not sure what happened today specifically to cause that type of movement, but it seems like the uptrend is still intact as far as we can tell. We'll see how this plays out. This is one scenario that I would like to see. I don't know if it would pull back this far. Maybe something more like that would be kind of ideal. I think that's possible. Again, that'll be very dependent on what quarter two results are going to be, how closely they line up with expectations, and then what their Q3 expectations are. If they're not as high as it really just depends on those two things. What are Q2 results and what are Q3 expectations? I'm hoping if we can see something like this, we'll buy a 228. If not, we'll just buy the dips. So just the quick summary for this one. Nvidia is currently, oh wait, I didn't update that. So currently it's at 262. My buy point right now is at 228, with the note that just buy the dip. No resistance because we're in that strong uptrend. Updated the date, and we're just expecting a flat quarter in terms of earnings per share right now. So that wraps this up. I hope you enjoyed it. Again, if you have any questions or want to share any comments about something newsworthy that you saw, let me know. I'd be happy to read it. Otherwise, please like, subscribe, and I'll see you on the next one.